How you doing, guys? My name is Avi. Welcome back to my investing channel. So today we are going to talk about NIO. I've made already several videos about this company and this one is going to be an update. So really quick, I'm going to give the highlights about the Q3 report. I'm going to talk about their future sales, what I'm forecasting about their sales, how it's going to reflect their valuation, and eventually we're going to talk about the capacity increase that is going to come soon in January 2021. So if you watch my video and you like my content, don't forget to click on the like button as it helps me a lot to grow the channel and reach more people. And also, if you're new over here, I'm releasing videos about tech companies and high growth companies. So if you want to stick around, subscribe to the channel so you're going to be notified for each video I'm going to upload later. Alright guys, let's start with the video. So let's start with the report. Let's go to the highlights. The proceeding from the car sales turned out to be $628 million, which is up 22% from Q2 in 2020 and 146% relative to Q3 in 2019, which means year over year we have 146% with the dollar value of the amount they managed to proceed from selling only cars. I remind you that they don't sell only cars, they also have charging services, they proceed from there and they lease cars, but their main stream of revenue is from selling cars. Now they just break a new record of the amount of units of cars they sold in Q3, which is about 12,200 cars. That's up 18% from the previous quarter, and year over year that's up 254%. Which means if we're going to compare 2019 Q3 to 2020 Q3, they sold 253% more cars than what they have sold in the previous year, which is a very good sign for the growth. Now the next thing is the vehicle margin, which is 14.5% for this quarter. That's compared with the second quarter of 2020, with the previous quarter, which back then the vehicle margin was 9.7%. And if we're going to compare Q3 2020 to Q3 2019, back in 2019, they had a negative 6.8% of vehicle margin. So that basically means a year ago, 12 months ago, when they sold a car, they lost money. On each dollar they managed to proceed from selling a car, they lost around 7 cents, which is around 7% of negative vehicle margin. As they managed to scale during the time, we've seen at start they managed to sell around 3,000 cars per month. Now they sell 5,000 cars per month. The more they'll manage to increase the units they sell, the more they'll manage to keep more cents on each dollar they sell. And that's why right now their vehicle margin is around 14.5%, which is a huge increase from last year, which means they are getting closer and closer to being profitable. So if we're going to look on the loss from operation, which means you're going to subtract the cost of goods sold and you're going to subtract the operating expenses, for this quarter, they lost $139 million. That compared with $175 million back in Q2 2020. And if we're going to go a year back to Q3 2019, they've lost $361 million. So in 12 months, they managed to reduce their loss from operations from $361 million to $139 million. It's important to understand that normally it takes time to a new company to reach profitability. NIO is relatively new. So another highlight that I would like to mention is that right now they offer the 100 kilowatt per hour battery pack that people can either buy and upgrade their car, or they can lease the battery for monthly payments. Their new model EC6 with this upgraded battery pack can reach around 615 kilometer range. Now it's important to mention it's not exactly 615 kilometers. You need to subtract around 20% and that's the actual kilometer they are going to reach. So for the next quarter, their management said they are forecasting to sell around 16.5 thousand cars to 17,000 cars, which is quite a lot because right now they sold only 12,000 cars. The only issue over here with NIO as for this moment is the production capacity, which means we have over here production constraints. As for this moment, they are able to manufacture around 5,000 units a month. But not long ago, their CEO officially announced that the production capacity will go up to around 150,000 units a year. And that will happen by the end of 2021. And then he said that after that, they're forecasting to double this production capacity to 300,000 units per year. Now that means a lot for NIO valuation. As for this moment, on average, NIO proceeds for each car they sell around $50,000. Even if I assume that the cost per car will go down, and we should assume that, so I can take 45,000 cars and multiply it by 150,000 cars to get to the future amount of sales if the demand will match the supply that NIO will offer. So when you multiply this $45,000 by 150,000 cars, you get to $6.75 billion. The year 2020 is about to end, and NIO sales is going to be around 2.3, maybe $2.4 billion. The information that we have about the increased capacity tells us that in the next 12 months, maybe 16 months, their revenue will go up from $2.3 billion to around $6.5 billion. Over 200% in a period of around 12 to maybe 16 months. I always like to compare the market valuation to how much they sell. In the future, when they are going to become profitable, I will compare their market value to their net income or to their cash from operations. But as for this moment, because NIO is still a new company, I'm comparing their market valuation to their sales. Now, price to sales ratio, that's a relative valuation indicator. And normally for tech companies such as NIO, the price to sales ratio should be around 15 to 20, maybe a little bit more. It really depends on how much growth potential the company has. So I'm assuming the long-term NIO price to sales ratio should be around 20. So when I'm going to take all that information, I mean the 20 price to sales, $6.75 billion of future revenue, and their current market value, which I'm actually looking at right now, which is around $70 billion, I'm getting to a conclusion that a likely scenario is to see a price appreciation for NIO of additional 100% from their current price. And that's because I'm looking at near-term market value, which will justify NIO operation and NIO future growth of around $140 billion. Which means I believe a 12-month target for their market value should be around $140 billion. Another important thing that their management said is they are projecting a close to $1 billion of revenue for the next quarter of 2020, which is the last quarter of 2020. Now, if we're gonna look 12 months back, in Q3 2019, they've proceeded only $250 million, which means a little bit more than 12 months later, in Q4 2020, they're about to report of around $1 billion of revenue, over 400% growth in a little over than a year. Now, last thing I would like to look at is their balance sheet. As of September, they had around $2.9 billion cash on hand. Their current assets are greater than their current liabilities by 2.5 times, which means they have enough capital to fund their future 12-month liabilities. And that's a good sign for us that a risk of defaulting is not likely in the next 12 months. Now, we're seeing a crazy trend with all the Chinese stocks as for this moment. XPeng is really popular as well, and Li Auto. So we have 4 names at China that are competing over the growing market share, which is Tesla, NIO, XPeng, and Li Auto. Personally, I think in the long term, the company that will manage to keep the greater percentage of the market share is the company that will make the necessary capital investments to answer consumer demand. What's important is what the consumer wants. And what I like about NIO, they have very competitive charging solutions, which most of their competitors don't have. I'm talking about the battery swap station. Alright guys, I hope you enjoyed this video. Thank you for watching it. If you haven't done so yet, please click on the like button as it helps me a lot to grow the channel, and feel free to subscribe. I will see you in my next video.